Yes, and unfortunately, it's looking like I could be right on the US equity front. The Australian equity is just screaming higher, but the US equities did exactly what I said they would do yesterday morning, which is they would have a rally, their Monday rally, but then they would run into a wall of selling. And that's pretty much what happened. So everyone's talking about, oh, it's okay, the market was up in New York on Monday. Well, could go sideways Tuesday as well. But I still think this is relatively heavy sitting price action after some significant sharp falls of late. And it's not boding the old style of the big funds just coming in and buying aggressively. They're definitely doing a little bit of buying. Some are buying, some are selling, of course, as always. But we've never had a market that's so centralized as it is at the moment in those big three funds and a few others not far behind. So the group think on Wall Street is soft economic landing. Remember, it wasn't so long ago that they were telling us that the US economy was strong. Notice the US economy's last GDP number of 3% annualized, that is not holding up at all in the discussions that are going on around the world now at major fund managers and institutions and economic circles. Pretty much everyone sees the US economy is weakening exactly as we forecast all year it would be at this stage. And I think people are going to be a little bit surprised just how quickly the US economy slows, because for some time I've been pointing out that consumer sentiment is at recession levels, manufacturing is at depression levels, and commercial property is tanking. Some buildings, I think it was San Francisco, are selling for 10 cents on the dollar. You know, they were a 65 million high-rise office tower sort of a few years ago, and now they're just sold for 6.5 million. So New York real estate agents are saying that many of the prestigious towers in Manhattan now are as much as 85% vacant. And people will go try to brush it aside with, oh yes, but that's the work from home thing. Well, no, it's more than that. There's a lot more crime in big cities in the United States than there was several years ago. And that is keeping people out of the cities, which is hurting all sorts of businesses. And that's a trend that doesn't look like stopping anytime soon. But in general, commercial property, given that there's a manufacturing depression, I mean, it is a depression. If you have manufacturing contracting for 2 years, that's a depression. The Fed will be cutting rates, but it doesn't want to panic things. So that's why you're seeing some economic houses in Wall Street now trying to get ahead of it. No, no, no. Even if the Fed's cutting because the economy's weakening, it's not a reason to panic. No, they're telling you. They're saying even if the Fed panics with a 50-point cut, that's not a reason to sell. It's okay. It's okay. No, it's not okay. As I pointed out on the beach yesterday morning, many interest rate cycles coincide with exactly the same movement in equity markets, and the whole idea that when interest rates go down, stocks go up, and when interest rates go up, stocks go down is completely false. Just look at the recent performance of the stock market in the United States and Australia's interest rates went up, the stock market went up, more so in the US, of course. In fact, the Australian stock market, if you've been in the Australian stock market the last 3 years and you're thinking, oh, it's gone up, it's gone up. No, it hasn't. It's actually lost against inflation. So over the last 3 years, I think I worked it out, it was about 2.7% gain for the Australian 200 index, whereas inflation was higher. So you've lost money if you've been in an Australian stock market for the last 3 years. It's been a good performer at the moment and on the day, but I've just sold some. AUS 200. Also overnight, I was a seller of Ferrari and Porsche, a couple of other stocks. And I'm a little bit bearish on Europe at this stage, and I'm a little bit bearish on the US stock market at this stage. And I do think the Federal Reserve will cut probably twice this year, 25 points each time. The big debate, Trump-Harris, is on over the course of the day, global day. And I think that's going to be very interesting indeed. I think people have pretty much made their minds up about Trump, but they haven't made their minds up about Harris. And in real time, without a teleprompter, she may not perform as strongly as many people believe she will. So I think she has more to lose. She has a higher vulnerability here. Of course, if she somehow pulls a rabbit out of the hat and really does perform strongly against Trump, that could seal the election result. At this point, as I forecast a year ago, I still think Trump will win. It was an easy call against Biden. It's a tougher call against Harris. It's quite a tough call against Harris, actually. But I'm seeing a lot of the undecided vote as being bashful about the fact that they're probably going to vote Trump. And therefore, that undecided vote, still significant, is more likely to be Trump votes. Also, the movement of Kennedy and some other people towards Trump is helping him. And it is helping him in those undecided voting territories. So I think Trump's a very strong runner here against Harris, a lot more than perhaps the mainstream media would like to think. And I do believe Trump will get across the line to win this presidential election. So that will be interesting. I think equity markets, a lot of global investors are cautious on US stocks ahead of the US presidential election. Maybe after this debate, one way or the other, there will be greater clarity. I think the election will be decided in this debate, actually. So in 24 hours' time, we'll know who's probably going to win the US election. I think it'll be very interesting to watch the debate. The last debate between Biden and Trump, at the halfway mark, they had a little bit of a break. And I did a social media post, and I said, it's already obvious who the clear winner is. It's Robert Kennedy, because they were both performing so badly. This time around, I think Trump has a vulnerability too, in that he's been a little bit flustered by how strong Harris has come out of the gates. But it is a long-distance race, and I think he is starting to gather himself. So tonight's debate decides the US election. I don't see that as having a great impact on markets, but if Trump's a clear winner, markets mistakenly believe that he would be bad for the economy and for the equity market. So the equity market could be soft on that. But I do think the United States as a nation and an economy faces a lot of uncertainty through the end of this year. There is going to be a lot of legal challenge, regardless of who wins the election. The other party is going to go dig deep on, legal challenges to almost every ballot in the country. So it's going to be a raucous time for the United States, November, December, and we'll see what happens. Now, and also we could have the situation if Trump wins, Republicans do well, the Democrats trying to push through a whole lot of policies in the last couple of months in which they hold the presidency, and that could create significant uncertainty and volatility of itself. So I see that period as a negative US equity market period. The Australian market is outperforming. I think, again, there's some foreign buying going on because the Australian dollar has been firm as well. I've just sold Australian dollars. I've just sold Australian stocks. I don't think these rallies can last. We'll see some downside. Today in Australia, in terms of data, we saw the Westpac Melbourne Institute Consumer Confidence Survey come out. It was negative minus 0.5% for consumer sentiment. Now, that's, I think from memory, that's like 7 of the last 12 months are negative. And I think it's 5 of the last 7 months are negative. I don't know why anyone's surprised. Things are very hard for regular people in Australia, and the top end of town is so self-obsessed with its. I'm trying not to curse. Anyway. The nonsense people are going on with about, oh no, the RBA has to raise rates because of inflation and the government's causing the inflation, so therefore they're a bad government, the RBA is good. That's all this old white people private club group think in a particular area of the Sydney CBD that is totally nauseating. One of our major financial market newspapers is heavily involved in this rhetoric, which is so dumb because it's a betrayal of the Australian people for the financial district to not criticise their terrible performance at the RBA. Like, it's a betrayal of the Australian people. If you care about Australian families and Australian people and you're working in the Sydney and Melbourne CBDs today for an investment bank, I mean, start shouting that the RBA just isn't doing a good job and therefore speak up Your bond trading desk will probably get less bond trading business with the RBA because that's what they threaten all the time. And I'm happy to go on the record on that. And I've already suggested to various people there should be another inquiry into the RBA and how it pressures economists and journalists not to write or say negative things about it. And it has a long history of doing this, a decade-long history of doing this. And you'd be surprised at the senior journalists and economists who have found themselves getting pressured via the bond trading desks of their respective institutions. This is really a scandal. And if there's any journalists out there who wants to follow up on that, very happy to talk about it. I'm going to talk about it in my upcoming book on the RBA, which will be interesting. I'm even creating a special RBA section on my website, cliffordbennett.com.au. This video is sponsored by PropX24. Thank you, PropX24, but these are not the views of PropX24, but I do appreciate their sponsorship and other sponsors who allow me to continue to give you purely independent, bold, and with attitude economic analysis. Anyway, how can I help you today? I think the US dollar is going to be firmer. I think gold and oil are becoming bid for reasons in the background to do with geopolitical tensions. And also they've just fallen too far, though oil is trying to price in a US recession and a global Western economy recession, perhaps in 2025. So that is a little caution there on oil, but I do continue to like gold. I'm buying gold against the US dollar, and I'm buying gold against the euro. I'm selling sterling, euro, Aussie. As I said, I'm selling some stocks. I'm selling some US stocks. But I do like being short, and it is a slightly high risk trade because there were buys yesterday. I do like being short the US 500, the NASDAQ, and the AUS 200 at this point. I hope it helps in some way. I mean, I enjoy talking, as you can tell, but I do hope it helps you too. Thanks very much. All the best.